Hey guys, welcome to another episode of the Real CFO Project. I'm excited today because we got somebody that's joining us that is right in line with what we try to do here. We're in similar industries, focus in different areas to a certain extent. However, Courtney Epps is joining us, and Courtney kind of exemplifies what it means to help businesses in terms of understanding and kind of getting more information in terms of their financial well-being. So our focus here, as you know, is to work with small business owners to add clarity to their financial piece of their business, to enhance everything else they do, to truly act as maybe their own CFO, because in many cases, small business owners can't afford a fractional or a full-time CFO. So we just want to educate, and I'm excited to have you on, Courtney. Welcome.
Thank you so much. I appreciate you having me on.
Yeah, so I'm going to hit some of the key highlights, right? Because there's many.
Yes.
Courtney is a tax strategist, has a family firm that
Yes.
focuses on tax strategy for small business and wealthy individuals, and is
Yes.
an author of a couple of
Yes.
different books. One
Yes.
being More Relaxing, Less Taxing, and What's Your Plan B? So I want to dive into those a little bit. Uh, Building an online community for like-minded folks to join, to educate, to help provide more guidance and structure and coaching. So that's an exciting. Let's dive into that a little bit as well. But before we jump into all the tax and the CPA, the firm side of things, tell us about Courtney. I mean, where are you from? How'd you get started in business in
Yeah.
general?
And I'm gonna actually grab my little girl.
Okay.
She's not making any noise right now, but she may.
She
This
may.
is my. This is Amelia, number 7. This is my baby number 7. She
Oh,
is
wow.
pretty much a little miracle baby. Um, my kids are 12. My oldest, or my last youngest, was 12. So this was definitely a shock. Had her right in the middle of tax season. She is number 6 out of 7 during tax season. So kind of crazy.
Oh,
But
wow.
yeah, so I don't, what really drives me, what I love to do is just free up money for people. That's, honestly, I have created a business that combines my passion and my profits and purpose as well. One of the things that we do in our practice is, for every dollar that comes through, we provide a serving of advanced immune support to children in need. And so that really drove us to get past the $1 million mark. And, last year we hit almost $4 million with our accounting practice. And that's really the reason why. Like, I love going back and getting money for people um, that did not even know that they'd overpaid in taxes. And we've gotten back about $50 million at this point. And moving forward, we're saving people about $10 million a year. So that's what I love to do. I don't really have any hobbies other than spending time with my kids. And 3 of my kids actually work full time with us now. So they're grown, and 5 of our 7 kids live with us. So it's kind of crazy busy all the time around our house.
Yeah.
But what I really love about what I've been able to do is that I build a team around me. And so now I get to do what I love, which is to just speak and teach and educate strategy. And I get to work from home now.
Yeah. So how did you get into that business? What kind of
Yeah.
guided you along that path?
Honestly, I would not have ever have done taxes. I always wanted to be an anesthesiologist my whole life since I was 5 years old. And I ended up getting, I fell in love with somebody right before I graduated high school, and I ended up marrying him later on. But he pretty much said that he could not be with me if I left and went off to college. And so instead of going to College of Charleston with a full ride and doing and becoming a anesthesiologist, I chose to stay at Coastal Carolina University in Conway, South Carolina, where I was from, and decided to stay with him. And I just pretty much looked for the highest paying career I could possibly get at Coastal, and that was an accountant. And so, and in the beginning, I said, I'm gonna get a quadruple major. I'm a major in in management, accounting, finance, and I'm going to do also I'm going to do sales marketing. And I decided real quick that I did not need to do all of that. And I ended up actually getting pregnant my senior year in college. I was 19 years old. We got married my junior year, and then my senior year, I got pregnant with my daughter and actually had her 2 weeks before I graduated from college.
Oh,
So
wow.
it was kind of crazy. I've always been on the fast track. Like I want to do everything real, real fast and have a family, have a business, all that good stuff. So that's the reason why I got involved. And I worked for a really large CPA firm during college and right after college, and I hated it. I actually quit. The I actually quit February 27th, right in the middle of tax season, my first tax season, and swore I'd never do a tax return again. So, um, you know, hindsight's 2020. I did not live up to that agreement.
Yeah, it doesn't sound like it. So, uh, transitioning from that firm into what you're doing now, helping small business owners, higher net worth individuals save tax dollars. I mean, that's an element that, being in the industry, being an accountant, working for a CPA firm, you realize that most of the providers out there, service providers out there, are really reactionary, right? It's
Yes,
not
very much.
value add. It's not
Yes.
ROI on the spend that they have. So that's not their focus. What made you kind of separate from that and become something different where you're focused, much like your experience aligns with mine a lot. I didn't get pregnant my senior year in high school, but I worked for a CPA firm for 6, 7 years, very reactionary, right? And
Right.
I needed out. I needed to find something else to
Right.
do. I got into some franchise tax operations, had multiple, sold multiple, area developer, that sort of thing, but really kind of came back to this point where we're at now in the last couple of years, focusing on small business owners, higher net worth individuals, and how we can help them enhance their financial well-being through simple things, but really being proactive in
Yes.
our engagement and our advice and just communicating. I mean,
Yes.
it's really that
And
simple. What made you kind of shift from being traditional to that approach?
so I've kind of always been that way, only because I was a business owner at first and foremost, and then an accountant. But when I started actually teaching strategy, like that was part of my full time gig, instead of just here and there doing it on the taxes, was in 2018.
Mhm.
And I went to a Tony Robbins event and realized like that he actually had an accounting firm that was there, and they were talking about strategy, and I was like, that really should be my focus. And I came out of that event and started actually charging for tax strategy and implementing that. I wrote my book that same time, but I knew all of the things because I was a business owner, not because I was an accountant that I could write off. And I just started utilizing and sharing that same information that I was doing with my clients, and that's how we grew. We literally grew from about $35,000 a month to $300,000 to $400,000 a month in the last. That's been 7 years now.
Okay. Now, there's a whole lot of different models out there in terms of strategy. You've got the TikTok and the Facebook and the Instagram
Right.
gurus that
Yes.
are uh, know a lot of what to say,
Right.
but they only say parts of it, right?
Right.
It's not fully educational. A lot of the strategy
Correct.
is deferral versus actual
Right.
savings. I mean, I don't want to confuse or muddy the waters, but there's a difference between tax savings and tax
Yes.
deferral.
Yes.
Those have to be balanced. That needs to be clearly articulated. But how, from your educate, you speak a lot on it, you train on it. How do you approach that kind of the full scope of the different strategies for your clients? And is that part of an ongoing service that you deliver, or are you looking like many of them out there, 5, 10, 15, $20,000 for a tax plan,
Yes.
where here's the
I
piece of
do.
paper, now give it to your guy and they can do everything? Or are
Yes.
you kind of, let's walk through this journey together?
Yeah. So, the major problem I see with the TikTok and all of that good stuff, the influencers teaching, they teach it, but there's nobody to do it or implement it. So they don't do tax returns. And the problem you run into is that you're not going to get an accountant who hasn't learned that information to say, oh, yeah, we can do that. That's the major issue. Then, but from there, what we do is we do a strategy session on the front end. So when somebody becomes a client, they have to book a tax strategy session. And so we're going through trying to see what we can do to possibly save them money in taxes and make sure they're structured properly, see if we can go back and amend any tax returns and get the money back, and then what they need to do moving forward, as opposed to just doing their tax return based upon how it was done last year. So I think that's the major difference in what we do. And then on the back end, we do a tax strategy session. And then we also tell clients, you should definitely book a tax strategy session with us end of the year, like around end of October, 1st of November. And the reason why is because there's so many other things. So we want to make sure that their income, wherever their income level is, that we're doing everything we possibly can to save them money.
So you look at it from two standpoints. You look at where they're currently at backwards to say, is there anything that we can do to alleviate some of that financial burden, increase the cash flows from some prior errors or prior missed opportunities? And then forward looking, let's continue to do this, but let's do it before the end of the year. And not April 15th, or when you call to say, hey, can you file me an extension?
Yes.
All right.
Yeah. And we don't, we are literally, you have to give us 45 days ahead of time in order to make sure that we're getting your extensions filed or your tax returns done. So we're a very different firm. I mean, we charge up front. Because I don't know who to work on unless you have paid us to do the work. We include that tax strategy session because although that's the least amount as far as the tax return that you pay for, it's the most important part as far as the strategy. And, it matters who you use as an accountant. So you need somebody who actually not only understands the system and understands what all you can write off, but is willing to actually go outside of the box and make sure that they're doing everything that they possibly can to free up money for you. That's one of the things that I see often is accountants are scared to death of the IRS, and they literally work for the IRS because of that. They don't work for their client, and they're costing their client tens of thousands of dollars. I actually had a client this week that came back to us from 2020, and she went in 2021 to someone else to do her taxes. She wanted to get a local firm, and she said she felt more comfortable with that. She went and did that. They actually reversed everything that we did and cost her an extra $5,000 a year for the last 4 years. And so now we're going back and fixing everything that they did to get her back the money that she overpaid. So, I understand there's this local feel and people want to, sit down and have a conversation with their accountant, but you've got to make sure that your accountant is on board to help you free up money in taxes, that they're not just there to be compliant and to make sure your tax return's filed.
Yeah, no, I think that's important. I always tell people when we're talking to them, like, I'm not the smartest guy in the room.
Right.
And if I act like I am, you probably shouldn't do business with me. I've seen it a number of times. CPAs, firms that are kind of stuck in that traditional model. There's a thing that comes with that, and it's called an ego.
Yes.
Right. And that ego prevents them from working with others, learning new material or ideas or concepts or opportunities that they can consult their clients, take advantage of. Understanding that, hey, Courtney knows more than I do in this lane. Let me call Courtney and see how we can work together to add the ultimate value to this client. I mean, that's the collaborative nature that you need with your advisors, your CPAs, whatever it might be, that they're not the one saying, hey, I've got the answers, you come to me, all answers come through me. That's the wrong approach, in my opinion. And I like the fact, because we've talked previously, and that's why we jumped on this call, is that there was a concept that you're working on. I can't exactly remember which one it was.
Conservation easements.
Yeah, there you go. Yeah, conservation easements. And you were more than open to speak with our clients if we had some that opportunity would work for. and help educate. And that the ultimate, goal, at least for us and our firm, is to, value first, right?
Yeah.
If we can't add value, and I'm not saying the standard, like we're checking a box, tax return
Right.
done, sales tax done, payroll tax done. No,
Yes.
value is beyond the standard, right? It's the ROI that you get from it, not just the task completion, but there should be a return on that investment. And if we can't do that ourselves, and there's several strategies that we can do, but we use outside parties because they're the specialist in it. And so I think that's few and far between operate like that, at least in our space. Is that what you see?
Yeah, that's 100%. The biggest thing is the ego. And guys, if you're listening in and you see me with this baby, like this is the first time in my life that I've actually been able to have a baby and spend time with her and be able to work. So, as much as it seems unprofessional, like she has been to 7 events with me already this year, and she has made herself, she's the little model for OTB tax. So we want people to see, like, this is what the American dream, I think, is all about, is being able to do this with your children. And but yes, I do believe the ego is a major thing that people, um, accountants want to be the smartest people. And what ends up happening is it causes major issues because you're so busy. If you're an accountant, typically, if your focus is tax returns, right? You're so busy doing tax returns January through April, you don't have time to do strategy. You don't have time to learn other businesses. You maybe have never even been in another business, and so it's very hard to say, well, no, you can't write those things off, because I can't as an accountant. But you can write them off in another industry. And a lot of times we do a lot of home-based business, so in the network marketing industry, and most accountants will tell people that that's not even legitimate. And we have clients making $18 million a year in network marketing, so you can't tell me that's not legitimate. So that's one of the major flaws that I see, and they tend to scare their clients into thinking things aren't tax deductible or they shouldn't take them because they're scared themselves. So I'm just not scared of the IRS. I think that's where I've become in the last 25 years, and where my strong suit is that we have so many clients. We do about 2,500 tax returns a year, and I know what would trigger an audit and what doesn't. And honestly, it's worth it to make sure that we're writing off everything we can for the client.
No, I 100% agree. I do, and I appreciate you sharing that. I talk to folks all the time, and the number one thing they get, or they say, if they're looking to make a shift or a change, is communication, right? I don't hear from my guy. I might have a question, right? And an email, and 2 months later, I might have an answer, or I've got a call 3 or 4 times. For me, and working with our clients, I'm not sure exactly the full context of the services that you offer within your firm, if it's just tax and strategy, but we focus really on small business, kind of holistically, on 4 pillars. They're accounting and bookkeeping, CFO/controller services, tax planning and strategy, and tax preparation. We don't have to live in every pillar. We can do one or the other. Somebody might have that pillar full, so we don't do that. But the value we bring is ongoing communication and regular meetings. And that, even if we don't have the answers, conversation, full transparency, them sharing their challenges, their questions, their things they don't understand, things they want to know. Throughout that process, we learn more about each other and our businesses and how we can help and how they can help us. So it's a two-way street with our clients. I call it our brain dump session. We might meet monthly or quarterly. It's a brain dump session. What's going on? What's happening? How can we help? That sort of thing. So with your firm, in terms of communication, you meet with them at least once a year, right? For a tax strategy before you do the prep. Is there anything ongoing throughout the year that you communicate to your clients?
So one of the things for us is that so right after the tax return's done, then we're going to do the strategy. So we're looking at what they gave us, right, and comparing that to what the client, so what the individual, like the tax preparer, actually um does the return. So I'm making sure it's correct, right? I review every
Mhm.
single tax return that comes through my office, and the strategy piece comes in that I'm making sure and telling them, hey, based on where you were last year, these are the things that you need to do. And then again in October, end of October, 1st of November, I want to make sure that those things have actually been done. So I think if you have a strategy session at least twice a year with your accountant, and really pinpoint at the beginning of the year, okay, here's some strategies based on where you were last year, what we need to do. Then making sure that you have a good set of books up front at the end of the year so that we can actually strategize before year end is a huge deal. And as long as that is happening, and granted, sure, it be beneficial to do it on a quarterly basis? Yes, if you are growing really, really fast, I think that's a very good idea. But at least having that front end, beginning of the year, end of the year, so that you can actually strategize before January through April 15th, right? There's no accountant who is good at accounting is going to have time to talk to you typically about strategy from January 1st until April 15th. And so when you keep that in mind and understand anytime after that, that's going to be a good time to make sure that everything's on track, that you've hired your kids, that you're paying yourself the least amount in payroll, if you have an S corp election, that you actually have an S corp election, that if you're making money, and when I say making money, more than $12,000 a year is kind of where we hit the LLC treated as an S corporation, because at that point where it becomes the same price to pay me to do the work as opposed to the amount of money that you save in taxes, and I'm a tax deduction as opposed to the taxes are not. So
Right.
it's very worth it to have someone who can focus on strategy as opposed to just that tax preparation, and somebody who's willing to talk with you a couple times a year, that doesn't put you off, that's willing to have a conversation and say, hey, yeah, I mean, are you attempting to earn income? Sure. Now, if you are, then that's a tax deduction. I think a lot of times when we deal with accountants, they're like, no, this is cookie cutter. This is exactly what you can write off. And if it goes outside these lines, you cannot write that off. Well, that's not true. It's truly, if you are spending some money on something and you're attempting to earn income with that, then it's tax deductible, period. Like, I'm not telling people to, start a business and then go buy a yacht, right? Or, a $300,000 car. But essentially, if you are attempting to earn income and it's reasonable, then it's tax deductible for you.
Yeah, I think the IRS states, and I might be wrong on some of the words, but ordinary and necessary to generate income for your business. So what that might be, I mean, it depends on the industry. Is it ordinary and necessary? And there's levels to it that you can argue. So from our standpoint, for me, is that ordinary and necessary? What would that reasonable person up there in the corner say? And if he said, yeah, that seems reasonable, it's common sense that I'm going to have a truck to haul my tools and pull that trailer to do the roof.
Yes,
That's ordinary and necessary,
correct.
right? So,
Yes,
yeah, I agree with you. So many times people just kind of brush things off. They don't understand the industry maybe or what they're trying to do. But that's the question you got to ask. And we tell our clients all the time, is it ordinary and necessary? If it's not, if you're buying a yacht and you're a roofing company, that yacht probably has nothing to do with that roof.
correct. Correct.
Period.
Yes,
But if you're in the leasing company and you're buying a boat and you might
yes,
use it a little bit personally,
correct.
but you lease it out to the
Yes.
general public and you make
And that's the
income,
tax
that boat
deduction.
is ordinary and necessary. The portion
Correct.
of it may not be, but those are
Yes.
things that we look at. I've got a client right now that, he's got a condo on the lake that he Airbnbs. He has a slip down there that he's got a $250,000 boat on. How does that become an ordinary and necessary business expense? Well, it's not in his residential rental business,
Right.
but he's in the process of looking for a captain in that area that he could rent the boat, pay the captain. The captain takes the family out that's renting the
Yes.
boat from him,
Yes.
and they have a
Perfect.
good family vacation, and he makes profit,
Yes.
right?
Definitely.
That's ordinary
Yeah.
and necessary.
Correct. That's exactly right. And he's attempting to earn income. So there's that, and when it's different, if you have a client that gets audited, every auditor is different. But here's what I will tell you, and this is very valuable. That and I've seen this over the last 25 years. We've only ever had 3 corporate returns audited. You are 10 times less likely to be audited if you have an S corp return as opposed to a Schedule C. So that is, if you are concerned about it being audited, then it is well worth its weight in gold to have an LLC, treat that LLC as an S corp election, and then write off all the expenses there. I actually had an auditor tell me back in 2013 when I was dealing with a 7-day audit for a client that the that it had to go up to a revenue officer in order for them to even look at a corporate return. And that is in fact true. I actually had someone audited on a personal level, and they had a corporate return, and when it came to the Schedule E, the auditor had to stop. Like, there was nothing he could do on the Schedule E. He couldn't even ask to look at it. He had to refer it to a revenue officer. And at that point, you need to make, at this point, over $50,000 a year in, or pay in taxes over $50,000 a year before they even look at that. So it is a really big thing to be able to have an S corp, and to be able to take some of that fear of being audited off of your plate. And again, here's the thing: if you are attempting to earn an income and you are showing that, right, you've got a set of books, you are bringing in income every single month, and every year you're making more money, like, you are solidifying to the IRS that you are truly attempting to earn income. You're not in a hobby,
Right.
and you should take advantage of all the tax deductions that you're entitled to take.
100%. No, I couldn't have said it better. It's the IRS. I've been in the business since 2000, so 26 years. 7 of that I was with the CPA firm. I've been under 2 audits, and they were Schedule Cs.
Yeah.
Auditors are very reasonable to work with, unless you're trying to hide something.
Yes.
If you have a deduction and a reason and an explanation, and it's not some BS, and you're trying to
Yes.
circumvent the tax code, they're reasonable. Now, I've never had it happen, but they may disallow those. But
Right.
you're not going to jail if you have legitimate reasons why. You just might lose,
Correct.
right?
Correct.
And get disallowed. Okay, now we know. But if you're taking in good faith deductions to minimize your income, that's what the code is there for. That's the advantage
Yes.
business owners have, is to utilize everything that's ordinary and necessary to pursue income, as Courtney was saying, as a deduction. And if you
Yes.
lose money, you lose money,
Yes.
right? And it benefits you from a tax. That's what it's there for. And the
Correct.
smart business owners and those looking to really enhance their financial well-being, their cash flow, their reinvestment into their business, reinvestment into their team, their employees, utilize these strategies and structures to benefit not just them, but their families and the families of the employees that work for them. Yeah.
Yes.
So let's jump
That's true.
into, you got 2 books, right?
Yep.
Or still 2?
Yes. Yeah.
Okay.
I'm working on a third one right now. It's coming out pretty soon. It's called How to Be a Tax Rebel.
All right.
But we're about a month out on that book. But the first one is More Relaxing, Less Taxing: Why You Be Brain Dead Not Own a Business. And the second one is called What's Your Plan B? Why You Be Brain Dead Not Own a Home-Based Business. Because there are a lot of really good benefits to having a home-based business, and like commuting cost and being able to have business use of home and things like that. And obviously there's benefits outside of the tax world, being able to be at home, with your family.
Right.
So so I added in that book. That's more geared towards the home-based business industry and teaching people why that is legitimate, why they would want to have that home-based business. But the more relaxed and less taxing, that is literally tax laws that any business would want to know. There's fringe benefits in there. There's how to hire your kids. There is, talking about social giving, how to give from a gross income level from your business and how to force that to be tax deductible. There's just so many things in there. Like one of the things that most people don't realize is you can actually hire your kids, employ them if you work from home, and then write off your swimming pool because you allowed them to work from your home. You literally write off a swimming pool, an exercise facility, a golf course, or a tennis court, or all four if you had those on your property. So just lots of little caveats in the tax law that I'm sure were created for the billionaires, right? But
Sure.
we get the same benefit because we are business owners.
No, that's fantastic. I'm sure they're full of great content. I have not read them, but I am going to go out there and definitely order them now.
Thank you.
What what's next for you?
So we are building out a community called Tax Rebels. That's really my main focus. I I have gotten to a place where we're growing really, really fast with OTB Tax. We want to continue to provide more content for people to give them the education. And because of some of the stuff that I have said over the last several years has been very controversial, especially with everything with COVID and all that good stuff. And so I've gotten shut off of Facebook for 7 out of 12 months in 2021. I got shut down for actually lost my Facebook account last March with 20,000 followers. And so we decided to build our own platform that looks very much like Facebook, that gives all the education and content, that brings like-minded individuals together so that we can all help each other grow. And I don't ever have to worry about getting, kicked off of a social media account. So that's what we're doing right now, and that's obviously going to fuel OTB Tax more. But I want to give this education, and that'll lead to live events as well as masterminds and things like that. So really bringing together business owners so that we can help each other grow. And it's not just taxes, but also wealth. Like, where do you put your money when you actually start making that money, so you can not only create true wealth but then also have tax savings, and then helping people grow their businesses? Because with me, I had an insurance agency and accounting firm that I built to 3,500 clients when I was 29 years old. I was short about $2,000 a month in cash flow, and I had no clue where to go. I couldn't borrow any more money. I was too young, right? There was just no way around it. And I didn't have anybody to pick up the phone and call and say, hey, what would you do in this situation? And I was too scared to tell my family because I didn't want them to be concerned, and can't call your clients and tell them you have problems. So I just decided to sell the business. And when I sold it, the guy I sold it to told me everything I wanted to hear. And I wanted to hear the fact that I was going to get my business back. And he pretty much said, hey, I'll give it back to you in 5 years for half of what it's worth. I'll buy it now. You help me build it, and then you can have it back. And so I took him at face value. Ended up 4 months later, he stopped paying me. I lost everything that I owned because I was short $2,000 a month in cash flow. And because I didn't have somebody to pick up the phone and call and have this conversation. And so I really want to build a community of people where we can connect with other business owners and we can help each other if there's those problems. Or, I could have, had I had a connection with a bank, a local bank or something like that, I could have maybe borrowed 25 grand and got me through the next year. But there was such an emotional attachment that I didn't know what to do. I couldn't fire anybody. But I could have, if I had a business owner who was beside me saying, hey, what about this? What about this? What about this? We could have come up with a conclusion, probably never sold the business. I wouldn't be as successful as I am today. I think that fuels me, and I learned a lot from that. But that's what we're doing, is building out that community. So I'm super excited about that. And then the book is obviously How to Be a Tax Rebel. That'll be coming along with it.
It sounds amazing. And, it's interesting how our paths kind of parallel is,
Yes.
the Real CFO Project is kind of something that's been, it started as, the KB article podcast and Real CFO and then a newsletter and everything. It became this Real CFO Project because the vision really became clear for me. And it's similar to what you're doing with Tax Rebels, is a community where business owners can come to learn how to
Yes.
enhance the financial aspect of their business, not
Yes.
do the QuickBooks themselves, not invoice
Yes.
customers, not do the payable, all of that stuff. It's to learn the financial aspect of their business, how to interpret financial statements, how to implement strategies such as what we're talking about today, and become truly the CFO for their small business. Because
Yes.
as a small business owner, you can't afford the CFO. They make
Correct.
$200,000, $300,000. A
Yes.
fractional CFO costs $180,000 to $100,000.
Right.
You, as the owner, the CEO, the CFO, the CMO, you're kind of everything. You have to know a little bit about everything and lead that way. So teaching the information and the knowledge base to lead, whether they have a bookkeeper, internal accountant, somebody, that's what our goal is to
Yes.
add that value to the small business owner. And not saying we have all the answers. We can show you how to do it yourself, and you're going to 10x your growth trajectory by implementing something like that, understanding that, implementing the tax strategies, saving cash flow, reinvesting a bit. It's going to 10x, 20x your business. So I love it. It's I'm excited to see it. And you're launching that very, very soon, right?
Yes. Next weekend, actually, August 30th.
All right. I'll mark my calendar.
Thank you.
All right. Where can people find you, Courtney?
So otbtax.com is our website. You can find that, taxrebels.com as well. And you can buy our books. You buy them on Amazon. You can buy them on our website as well. But I think the book is very valuable, even if you didn't use either one of us. That's a really good. It's about a 5-hour read, and there are things in there that you would never know unless you read that book. I actually, I not he's my mentor. I've never met him before, but his name is Sandy Botkin. He wrote a book called Lower Your Taxes Big Time. And that book really changed my whole trajectory and how I started teaching tax strategy. He actually worked for the IRS for 5 years, trained IRS agents. He's a tax attorney and a CPA, and he teaches everything that I teach in that book. Mine's just a more condensed version and a whole lot easier to read because it's coming from somebody who understands business and not just an accountant conversation. Because I think accountants sometimes make things a lot harder than they have to. I don't know why that is, but it makes people have a really hard time understanding accountants for the most part. So I actually had to rewrite the book so that it wasn't coming from me, so that it would be more drilled down so you could understand it better.
No, that's awesome. Guys, be sure to check out Courtney, order her book, learn. But I'd leave you with this. Make sure you're investing time in the financial well-being of your business, understanding financial statements. You don't have to do all the work. Understanding tax strategy, not waiting until the last minute and say, oh shit, I owe the IRS 50 grand. Do some planning, understand that you might owe them 50 grand if you do nothing. At least you know. But more importantly, you can take steps to maybe minimize that in legal ways that not only enhance your business, but also your cash flow. So anyway, appreciate you guys joining again. We'll see you next time.
Thank you so much.